Hi everyone. Hello. Yeah, so it's audible to everyone? Yeah, thank you. So we'll be starting in next 2 minutes. Let other folks also join. Yeah. So we'll start the session. Myself, Dhiren Kumar, CA in ClearTax, working under GST from last 2.5 years. So and from the inception of GST. Now, based on our last webinar, the feedback which we got, so we are covering this time input tax credit. So what is input tax credit? What is the importance of input tax credit overall under GST? How we can optimize our working capital? Yeah, so it started now. Yes, how we can optimize our working capital, what measures you should take, how to do reconciliation, what are the importance of reconciliations. So those things will be covering on today's session. So this will be 1 hour session. I request you guys to post some queries and let's make it interactive as much as possible. If possible, I'll reply at the time of discussion itself, or at the end I'll reply for all the queries. Yeah. So as we all know that ITC being heart of GST, everything revolves around ITC, because at the time of purchases I need to take input tax credit. Then that needs to be set off from output tax. So input tax credit, it's one of the most important aspect under GST which we need to take care of. Now, because this COVID-19, so many relaxation been given by government under ITC. So, for example, 36(4) rule has been deferred for the time being, and my GST 9 extension has been provided by government. Few of the relaxation under GST 9 and 9C form has been given. So those things we'll be covering on today's topic. And few of the because of forgery and on other things under GST, few of the things has been made difficult also for taxpayer, for a genuine taxpayer to avail ITC. So those aspects also we'll cover, and then we'll covering that how the reconciliation, how ease of reconciliation process will be helping you on taking the ITC. So first of all, what is input tax credit? Section 2, subsection 62 of CGST Act defines input tax in relation to a registered person. So input tax in relation to a registered person means the CGST, SGST or IGST charged on any supply of goods or services or both to him, and includes IGST and RCM. So two things needs to be focused upon is to a registered person. So input tax in relation to a registered person made to him. So we all know that under GST, if at the time of purchase, place supply is not my GST, then we are not allowed to take it. That is coming from this input tax definition, that it needs to be made to a registered person and made to him. So one second. Is it audible to everyone now? So for those who it's not audible, please refresh it once. So to a registered person and made to him. That means if I'm registered in Karnataka, all the purchases which is for which place supply is Karnataka, only for those purchases I'm allowed to take ITC. Rest I'm not allowed to take ITC. So that is coming from input tax credit definition. And that you can also think of this from table 8 of GST 9, where government at the time of doing calculation of 8A, which we'll be covering upon later on, they are excluding all the ITC which is on account of different POS. Your registered state is Karnataka. Any POS apart from Karnataka, you will not be able to take credit. Now, going further, what are the conditions for claiming ITC? So majorly all the conditions has been provided in section 16, 16.2, 16.3, and provision of section 16.2. So it says every registered person entitled to take credit of on supply of goods or services or both to him in the course or furtherance of business. So this is the important term again, in the course or furtherance of business, subject to such condition. So 4 condition has been provided under section 16(2) itself. That is, GST return needs to be filed by supplier. So whoever is supplying to me, that GST return needs to be filed by him. Tax invoice should be in my possession. So recipient claiming credit needs to have tax invoice with himself. GST on such supply needs to be paid by my supplier. So from whom I'm taking, for example, vendor X, I'm purchasing from vendor X. Vendor X needs to pay those taxes under GST. Now, goods or service or both should also be received to me. So goods, if it is goods in transit, I cannot claim credit even if tax invoice has been received with me. So goods or received should also be received. These are the primary 4 conditions which is associated with section 16(2). Now going further, proviso to section 16(2) says that if I have not made payment to my vendor within 180 days, then again I'm not allowed to take credit. So another condition attached here with is payment needs to be made to my vendors within 180 days. And further, section 16(3) says if I have claimed depreciation, if I have claimed depreciation on the tax portion. So in case of capital goods, if I'm consolidating the tax figures in my depreciation value, then I'm not allowed to take credit. So these are overall 6 conditions. So first is GST return needs to be filed by supplier. Tax invoice should be in my possession. GST have been paid by my supplier, should have been paid by my supplier. Goods or services, both should be received. Payment to supplier within 180 days. And if depreciation claimed on tax component, then I cannot claim ITC on it. So these are the 6 major conditions on claiming ITC. Now, going further on documents. So what are the documents required for claiming ITC? Since we talked about tax invoice, so we already discussed in this previous slide, the tax invoice is in the position and should be with me for the purpose of claiming credit. So now they're talking about the rule 36 of CGST rules talks about what are the documents required for claiming ITC. Now in this case, I'll focus on majorly on 36A, which says an invoice issued by supplier of goods or services or both in accordance with section 31 needs to be with you. Rest in case of reverse charge, we all know that 31(3)(f) needs to be complied. Debit note needs to be there in case of my section 34. And then bill of entry in case of import needs to be there. Invoice or credit note in case of IST also needs to be in possession. Majorly we'll talk about this invoice per se. This invoice says, now with the implementation of e-invoicing, 3 subsections has been added in rule 48 of CGST rules. That is 48.4, 48.5 and 48.6. And that says if as a registered person, I am liable to get registered for e-invoicing, that is my turnover is more than 100 crores, then I need to do invoicing as per rule 48, which states manner of e-invoicing, manner of issuing an invoice. And that specifically says that QR code needs to be there on my invoices. So rule under proviso of rule 46, specific line has been added via notification 70, and that says that I need to have QR code. I need to have QR code on my invoices. Then only that will be a legal invoice under GST. So now, for example, from 1st October, let's suppose the invoicing goes live. So as a recipient, what you need to understand is if my supplier having turnover of more than 100 crores, then I compulsory need to receive e-invoicing. Then only that will be a legal invoice under GST, because that is specifically said under 48. If that is not a legal invoice, you are not allowed to take credit. So that thing from an e-invoicing angle, you need to consider. So that is on e-invoicing part. Now going further on, what is the time limit of availing any input tax credit? So we all know that, yeah, section 16(4) states due date of filing of return under section 39. That is my for the month of September. So for example, right now if we'll talk about 1920, so for 1920 September 2020 return filing date, due date of return filing date, so that will be 11th October. Maximum I can claim credit up to 11th October or date of filing of annual return, whichever is early. So if we'll go back on 1819, then my due date will be 11th October 2019 or date of filing of annual return, which is now 30th September 2019, 30th September 2020. So whatever is earlier, that you need to cater upon, that you need to comply. So for my 1819, now due date of claiming ITC has already been over. That is 11th October 2019. That's it. Yeah. Going further on reversal of input tax credit. So since we already discussed upon that what is my input tax credit, what is the eligibility conditions, how I should claim credit. Now there are various conditions, there are various scenarios where I need to reverse ITC as well. So in few of the cases I need to reverse ITC. One of the primary reason in the industry by which they are reversing the ITC is my section 16(2). So if I am not making payment to any of the vendors, so for example, in the month of June, I have purchased something. Now I have claimed ITC as well. Now in the next 180 days, I'm not making payment to my vendors. Then I need to reverse the ITC along with interest. Yeah, obviously, again, a reclaiming of credit option is also available. So for example, if I am making payment to vendors on 183rd days or after 190 days or something beyond 180 days, then what treatment you need to follow is you claiming credit in this June month, reverse it after 180 days along with interest, and then reclaim the credit. So that will be reversal of ITC on account of proviso of section 16(2). Then 42, 43 of CGST rules states that if any input tax credit has been any goods, any supplies has been used for my personal consumption, or that is used in case of exempt supplies. So proportionate ITC I need to reverse. That is from rule 42 and 43, which we need to do it on monthly basis. Then section 18(4) specifically says if I am a normal taxable person, because of my turnover limit or because of my turnover limit, I am converting from normal taxable person to composition scheme, or any of my taxable supplies becomes exempt supplies. So any goods which has been considered as taxable supplies, now going forward it is an exempt supply. So on those reasons as well, I need to reverse ITC on proportionate basis. So there are other reasons as well, but majorly these three reasons has been covered. Section 16(2) proviso, I need to make payment to my vendors within 180 days. Rule 42, 43, and section 18(4), conversion from taxable person to composition taxpayers, or conversion from taxable supplies to wholly exempt supplies. So these are the major 3-4 conditions. Yeah, ITC for 17, 18, 89 eligible to versus 44. Yeah, so that will be okay. Yes, Dinath. Yeah. Now coming forward on ineligible input tax credit. Ineligible input tax credit, we all know that section 17(5) talks about ineligible input tax credit, where a lot of scenarios has been given. For example, if I am consuming good for my personal purpose, or goods has been lost, stolen, destroyed, or written off, or any free samples by government, or I have given benefits to my employees for any traveling purpose or anything. So those things has been marked as ineligible under GST, and very common logic behind this is because ultimately tax has been charged from the end user, who is the end user. So the company giving these benefits or goods has been lost. So for example, any goods has been lost now, tax on this goods cannot be passed on to government. So reason being, on the purchase of it, they're blocking the ITC. So that is the common logic on blocking of any ITC. There are other scenarios as well where ineligible ITC has been made under section 17(5). Now, one of the thing which is coming in industry in very rapid way, that because of this COVID-19, what government has done, they have made medical insurance mandatory for any for all the organization. So MHA, Ministry of Health Affairs, Ministry of Home Affairs, has issued a specific circular dated 16th April 093, April 2020, that specifically says that social distancing needs to be maintained in an organization, and you need to mandatorily do the medical insurance for your employees, for your workers. Now, if we'll read section 17(5)(b)(3), so subsection 3 of it, and that states rent-a-cap, life insurance, and health insurance, except, so these are blocked. Rent-a-cap is blocked, life insurance is blocked, and health insurance is blocked, except where the government notifies the services which are obligatory for an employer to provide to its employees under any law for the time being for. So it specifically says under any law. If government is making it as obligatory in nature for an employer, then you can avail the credit on it. So now, because this COVID-19, what government has done, they have made the medical insurance for your workers as a compulsory thing for everyone. It's not only about factories or something. It's normal offices, workplaces, factories, everywhere. So government has made medical insurance mandatory. So any insurance done after 15th April, that is coming out of this circular, that now as per section 17(5)(b)(3) exception, you can claim the credit on it. So this specifies that since government has made medical insurance mandatory in nature, taxpayer can now avail GST input tax credit on any premium paid on account of medical insurance. So earlier, medical insurance, you are not allowed to take credit because that was specifically covered in section 17(5)(b). Now, after government making it as obligatory in nature, you are allowed to take credit on this. Going further, so since we talked about basic issues on what is ITC, what is my ineligible ITC, how to claim ITC, what are the conditions associated with ITC, what I need to do when I need to do reversal on ITC, and what was the impact of COVID-19 on this section 17(5)(b), specifically on health medical insurance part. Now we understand to claim appropriate ITC, I need to do reconciliation on timely basis. So what is reconciliation and why I should do it? First of all, for the purpose of claiming any credit, if you'll recall section 16(2), then that specifically says return has been filed by my supplier and tax has been paid by my supplier. So return tax has been paid, that you cannot see, you cannot verify it. ML or something will suffice at that purpose, but you need to take credit only if it is filed by my supplier, and that you can see through GSTR 2A, which is GSTR 1 for your supplier. So reconciliation of your purchase data with your GSTR 2A is compulsory in nature, and that too obviously after this 36(4). So now any ITC which you are claiming under table 4A5 of GSTR 3B, then you need to claim, do the reconciliation and then claim credit accordingly. Now, why reconciliation is important? So since we discussed that, what is the purpose of reconciliation? Why I'll do the reconciliation on monthly basis? What is the use of it? So I'll get to know 3-4. These are very basic ones which everyone knows. So these it's like, am I being tax compliant from reconciliation, from doing a proper reconciliation? Since you'll get to know that how many invoices, for example, out of 100 invoices, 18 invoices or 17 invoices are getting matched, 10 is getting mismatched, 10 is missing at your end, and 10 is missing by your supplier end. So you get to know that how much tax compliant you are in terms of claiming of ITC. For example, any of the invoices which has been uploaded by your supplier in their GSTR 1, but it has not been filed in GSTR 1. So the status will come as not yet filed. It will not be filed, it will come as not yet filed. So those things you'll get to know through reconciliation. Now, whether you are claiming any wrong notices, wrong ITC, because of which you can face the repercussion of notices. So if for example, you are not doing the monthly reconciliation, you are not matching your ITC which you are claiming on monthly basis with the 2A which is reflecting. Now, so many notices has been flooded on this account that government telling that 3B versus 2A needs to be reconciled on monthly basis. If it is not so many notices, an average, I will tell you, based on our client, average at least on a monthly basis, 5-10 clients minimum get notices on account of this 3B versus 2A. So on monthly basis, you all must have been getting notices on 3B versus 2A. So that is again a pre-check if you do the reconciliation in-house at place. Now, another thing, various companies follow this thing, that they'll not do the reconciliation, or they'll just claim the ITC on the basis of 2A, or they'll claim the ITC only on the basis of purchase. That way, you'll not understand that what is the actual ITC which I should claim, and that will impact your working capital. So sometimes you claiming excess ITC, sometimes you claiming lesser ITC. If you are claiming excess ITC, you need to reverse that ITC along with interest portion. So that is again harming your working capital. And if you are claiming lesser ITC, then also it is an impact of working capital for you. Further, who are the suppliers from whom I am getting the most amount of pay in reconciling? So for example, you have 1,000 vendors with you. When you will do the reconciliation, you will get to know that who are the regular vendors who are not filing on timely basis, or who are not complying at least in terms of GST. So these are the problems which you'll get to know once you start the reconciliation, and then you can look up to the solution part. For example, I'm not doing the reconciliation, and one of my vendors, they are very good in terms of other stuff, but they're not complying GST at all, and you are facing notices only because of that vendor. Because that vendors are not filing ITC on proper their GSTR 1 on properly basis, and you are claiming ITC on that account. So those things can be identified only when you do the reconciliation on timely basis. Now going further, what are the importance of doing reconciliation? So see, we understand that why reconciliation needs to be done, why reconciliation is required. Now, once you do the reconciliation, what you'll get out of it. So first and foremost thing, you will understand that whether your vendors are reporting appropriate liability in their GST1 or not. So let's suppose you have made a purchase of 1 lakh rupees and your vendors are uploading it only as a 10,000 rupees because they'll pay lesser tax in that account, and now you are claiming excess ITC. So those things you'll get to know vendor wise whether that vendor has uploaded it on appropriate liability, whether vendor is uploading it on timely basis or not. Going further, whether appropriate credit been availed by you. So again a stuff. For example, this was let's consider it as a vice versa situation, and you have made the purchase of 1 lakh rupees, but by mistake a clerical error been made, and you recorded that invoice as a 10,000 rupees. Your vendor has uploaded that invoice as 1 lakh rupees. Now, when you do the reconciliation, you'll get to know that you have claimed 1,800 instead of 18,000. Say tax rate is 18%. So that those things also you'll get to know when you do the reconciliation. So appropriate, whether you are claiming appropriate ITC or not, that can be accounted for. Whether your vendor is uploading the proper liability or not, that can also be seen over there. Then further, you'll also get to know why mismatches are coming. So once you do the reconciliation, you'll understand why mismatches are coming. For example, you being a company X, you are following a normal serial number, invoice number procedure 1, 2, 3, 4, whatever, and your vendor has some nomenclature attached to it, and that is like they'll start from XY 1, 2, 3, 4. So why mismatches is coming actually? When you'll do the reconciliation, then you'll get to know that what is the reasons of this these mismatches. Now, so these are the normal reasons, normal things which you'll get to know when you'll do the reconciliation. Further, after doing the reconciliation, again a process start which says once, for example, you have 1,000 vendors. Now, 1,000 vendors, you have done the reconciliation of the 1,000 vendors, and out of those 1,000 vendors, 700 vendors being complied. Now, on 300 vendors, you need to do a monthly communication. You need to do regular communication with those guys, and you need to communicate to them that you need to amend all the invoices, amend the invoices where you have gone wrong, or for example, you have missed out something. So those things you need to cater upon. So communication, regular communication with vendors again becomes very important along with that reconciliation. Now, okay, so earlier we all know that earlier we used to do for 17-18 we have done the reconciliation once in a fiscal year. Now going forward, currently we are doing it on monthly basis. Why? Because notification number 49 dated 9th October, they have implemented this rule 36.4, which simply says that you need to match it on monthly basis. If we remember that one press release dated 18th October, when we were doing the filing at the inception of GST 9, when first GST 9 we were about to file, on 18th October 2018, government came up with a press release and they said that GST 2 is just a facilitation, so you don't need to worry on that part. If you have tax invoice with you, you just go ahead and claim the credit. Now, because of that forgery and because of those things happening in industry, government restricted it, and this is becoming difficult for a genuine taxpayer. Now, what is happening is you need to comply that ITC on monthly basis, whether so now you need to do reconciliation with your purchase register along with 2A. So your purchase register needs to be reconciled with 2A, and you need to see whether you are claiming the ITC on proper basis or not. And so there are few of the vendors who are quarterly. So government, considering those things, what government said that now you can claim maximum ITC, which is equivalent to input tax credit in respect of invoices or debit note, the details of which has not been uploaded by the suppliers under subsection 1 of section 37, that is their GSTR1, shall not exceed 20% of the eligible credit available. So 20% of the eligible credit available is the term used in respect of all the invoices which has not been uploaded by my supplier. So for example, you have made purchase of 100 rupees, and your vendors or total purchase for you in this particular month is 100 rupees, and your total upload GSTR1 which has been filed by your vendors is 80 rupees. Now you need to do monthly reconciliation, say everything is eligible. Now 80 into 20% you'll do, so 120%, that is 96 or 100, you will compare both, and whatever is lower, that you need to claim it. So maximum ITC which you can claim is 96 itself. Now, this was the earlier notification which came on 9th October. Government later on reduced or slashed this 20% to 10%. So now, maximum credit which you can claim is 10% more than GST-1 which has been uploaded by your supplier. So during 30th GST Council meeting on 18 December, government slashed this provisional ITC to 10% from 20%. So now, if the considering same example, your purchase is 100 rupees and invoice is uploaded by your supplier is 80 rupees. Now, what you'll do, 80 into 110%, that is 88, and 100, you'll compare these two, and whatever is lower. So 88 being lower, you can maximum claim ITC, that will be 88 rupees. And this implementation of Rule 36(4), we everyone know that, yeah, this make us do the monthly reconciliation on compulsory basis. So now practice of doing reconciliation on quarterly, half yearly or annual basis to monthly basis is again giving a lot of pain to an industry, and a tool is becoming more and more important nowadays, because earlier we used to do it in Excel anyhow, because that was a one-time exercise or maximum two-time exercise in a year. Now considering this on a monthly basis, this will become hectic for any user to do on month-on-month basis, and then keeping track on it. And like we discussed, once the reconciliation is done, you also need to comply, you also need to communicate with your vendors. So that part is again associated with that reconciliation now. Considering this COVID-19, so government came up with this notification 30 dated 3rd April 2020, and they said for the month of Feb, March, April, May, June and July. So consider these 7 months, July and August. So these 7 months, you don't need to comply with Rule 36(4), and you can simply take credit on the basis of prior period. So how we used to take credit before 9th October 2019 is, I simply go with my purchaser and I claim ITC based on my purchaser. So because of this COVID-19, since everyone knows that GST-1 date has been extended, 3B date has been extended, business got hampered. So government said that in this 7 months, you claim ITC based on your purchase register, and when you will do the filing of September month. So again, it is getting important because 3 months are there online. So in the month of September, you need to do the cumulative reconciliation for this from Feb period to September period, and a cumulative adjustment needs to be done. Now, and so not monthly reconciliation is needed compulsory during this period, but what you can do from Feb to September, you can do a single reconciliation, and a cumulative adjustment needs to be done in your GSTR 3B. And then obviously thing which is coming in market is whether, if for example I have claimed during this 7 months 1 lakh rupees and my GST 2A is only 90,000 rupees. Now since I need to reverse my 10,000 rupees, whether I need to pay interest on it. So considering this notification has been provided, or relaxation has been provided by government side, no interest should be charged on these 10,000 rupees which we are reversing now in my GST 3B. So again, reiterating on this point, Feb, March, April, May, June, July, and August, I don't need to do a monthly reconciliation. I'll do the cumulative reconciliation in the month of September and do the adjustment accordingly. Going further, on refund of accumulated input tax credit. So all the entities who are claiming refund on account of accumulated input tax credit, you all understand that now pain has been increased. Earlier, I guess circular 56 or something, which has been issued by government, and they said that you don't need to go ahead with two-way part, at least for claiming refund on account of accumulated ITC. You don't need to see that. Just claim ITC on based on your books of account. Now, Circular 135, which is dated 31st March, a lot of benefits has been given. For example, that no bar in claiming refund of multi-fiscal year. So on March and April, you can combine the figure and you can claim refund on it. Earlier it was different financial year, you didn't need to file separately. Or a refund on account of excess payment of tax. So it is excess payment of tax, refund on account of excess payment of tax. Those benefits has been provided to you on section 54(3). But one restriction which has been provided by government is, it has been decided that refund of accumulated input tax credit shall be restricted to the ITC as per those invoices, the details which are uploaded by the supplier in Form GSTR 1 and are reflected in Form GST 2A of the applicant. So again, similar to Rule 36(4). Now, even if in case you want to claim refund of accumulated ITC, you need to reconcile it with GST 2A of your purchaser, and once it is getting reconciled, then only you can go ahead with claiming of refund. So this is again an exercise which requires a reconciliation on your part. So since we have discussed this much, on reconciliation part, and I understand that most of us are doing reconciliation on a monthly basis. What are the common issues which we normally face when we do the reconciliation? What are the common issues which we normally face? Few of them has been jotted down for your reference purpose. So a very common is my invoice number does not match. So invoice number provided by me, invoice number uploaded by my supplier, and 50% of them mismatches are because of this reason. My invoice number does not match at all. Or another major issues which is coming in industry is my so since for example, I am a larger enterprise having business in 20 GST in 20 different states, so I have 20 different GSTs. My vendors, instead of making charging on 29, they are issuing an invoice on 27. So that is, instead of Karnataka, they are doing it on Maharashtra. Again, since we already discussed, input tax means to registered person on his account. So that means that my GST should be there in place, and even if it is the same PAN, you cannot claim credit on those accounts. And once you do the reconciliation, you'll find that this is coming under missing bucket, missing in supplier, and missing in two-way part, missing in your purchase register, because in your purchase register you have accounted that in 27, and your supplier has uploaded that in 29. So that will come under missing bucket. Once you do the PAN level or something reconciliation, you'll get to know that a wrong invoice has been uploaded, wrong GST has been uploaded by my supplier. Going further, invoice date is again an issue, because in most of the industry where SAP is being followed, and in various scenarios, only posting date we are accounting, and we are not accounting invoice date. So that creates a problem, because when my supplier is issuing an invoice, for example, 23rd is June. 23rd June is the date. They are issuing an invoice on 23rd June. You are accounting it on 30th June, or let's say on 7th July. Then invoice date, instead of invoice date, you'll put the posting date over there. So 7th July will be there, and 23rd June will be there in my invoice copy. So when you do the reconciliation, again, this will not match. My invoice date will not match on account of this reason as well. This creates a huge problem when it is an year-end thing. So 30th March or 29th March, and you are accounting it on 7th April, 8th April, that will create a mismatch, because that will be a multi-fiscal year issue. Now, one major common issues, which is like return period, which has been delayed by my vendors. So I'm purchasing is in this June month. Instead of reporting it in July, my vendor is reporting in after 6 months, 5-7 months. So those things again becomes a problem when we do the normal reconciliation. Now, invoice value from supplier and purchaser differs. So what happens normally? I have rounding of 10 rupees. My supplier has of 1 rupee. So whenever I'll account it on my ARP, I'll do rounding off at 10 rupees, and my supplier will do at 1 rupees. So when he'll upload in his GST 2A, figures will come something different, and in my purchase it will be something different, and there will be a nominal difference on account of reconciliation when we'll do. So that is also very common issues which we face during reconciliation. Now, going further, a very big entities that practically also we have experience are, even if my supplier is issuing debit note. So let's suppose I have made the purchase of 1 lakh rupees, and my supplier is issuing debit note associated with this tax invoice of 10,000 rupees. So earlier purchase was of 1 lakh rupees. Now a debit note of 10,000 being raised by my vendor. Now what he'll do, he'll upload his tax invoice of 1 lakh rupees and debit note again in whatever period he'll issue as 10,000 rupees. Me as an entity, as a recipient, what I'll do, I'll account for that as 1,10,000 or 1,10,000 as a single invoice. So when I'll do the reconciliation, I'll face mismatch when I'll do the invoice to invoice level reconciliation, because these are two different document type, right, under GST. One is my tax invoice, and another is my normal debit note. So when I'll do the reconciliation, tax invoices 1 lakh in my 1 lakh from GST in GST 2A and 1,10,000 in my books of account. So they'll still create a mismatch. And since I am not accounting debit note at all, when we'll do the reconciliation of debit note credit note part, that there it will come as missing with purchase register, because I have not accounted the debit note at all. So this is also a very major problem which is coming out in industry, and various bigger enterprises also follow this thing where they are facing a lot of difficulties. Another problem is multiple invoices. So what happened majorly in case of telecom industries or GTA units or any fixed supplier having very nominal values. So on those cases, being a supplier, what they do, they upload one invoices. So let's suppose telecom, we have 100 employees. They have uploaded as 100 different invoices in their GSR one. So it is coming as 100 invoice in my GSR 2A. In my books of account, instead of accounting it as 100 different invoices, what I'll do, I'll sum up everything. I'll simply account as telephone expenses to this. Now, when I'll do the reconciliation, I'll see that invoice number 1 having invoice number 1, 2, 3, 4 till 100 in my GST 2A. So doing this reconciliation again is a biggest pain point in industry. So this also needs to be handled upon. And one more major common issues which we have faced is different nomenclature has been used. So me being entity X, I use X before every invoices. You being recipient, you being company Y, you'll receive, you'll account for Y before every accounting and invoices. So when you do the reconciliation, you'll find X slash 123, and I have uploaded Y slash 123. So this will not get reconciled when you'll do the normal VLOOKUP or something in your reconciliation thing in your Excel. So these are the major common issues. Yeah, obviously there are more and more issues with the reconciliation, but yeah, these are the top 8 issues which we have experienced from July 17 till date, based on the client feedback, this and that. So these are the major top 8 issues which you need to account for. Now, since we already discussed on what are the reconciliation which we issues on common issues which we face on reconciliation, there are various forms or various other areas where my normal reconciliation helps. I already talked about 3B versus 2A notices. Multiple notices on account of non-reconciliation between 3B versus 2A. Half of them, I agree, half of them being wrong from government side as well. So, normally I face a lot of notices because my 3B ITC claimed in 4A5 of GSR 3B is not getting reconciled with 2A of GSR 3B. So that is where my reconciliation will help you. Again, table 4 of GST 3B, entire table 4, my eligible ITC, ineligible ITC, ITC reversal, everything talking about ITC and putting figure over there needs appropriate reconciliation. If we all are aware, and for new returns, one challenge which will come and which will face on going forward is currently what industry is doing, normal 50-60% on industry, they are directly expensing off that ineligible portion of my purchases. So since it is an eligible portion, I don't account it under ITC ledger separately, and I club it as a single entry. So I do the clubbing. Now under new returns, a specific column has been given, a specific row in my RET1 form has been given, and they are telling if it is an ineligible supply, accept that value in ANX 2. So going forward, what you need to do is, let's suppose a food bill is coming to you. Currently, you are expensing it off, so that is not there in your purchase register, not coming as an ITC in your purchase register. And when you'll download the 2A, that will come as an invoice, which when you do the reconciliation, you'll find it as missing at your end because that is ineligible and we simply expense it off. Now, in new returns, what is the process is, in ANX 2, you need to accept that invoice because that is my genuine invoice. You cannot reject or mark it as pending because then that will go as a pop-up to your supplier and they'll say that why you have rejected that invoice, because since it's a genuine invoice. So you need to accept that invoice, and you can accept it only when you do the reconciliation. And once you have accepted it, since you know that it is my ineligible supplies, you cannot claim ITC on it, then you need to reverse it specifically in table 4B or 4B3 or 2 of RET1. You need to reverse that thing specifically. Now, so ineligible ITC accounts various issues. First, you record it properly, then do the reconciliation, then reverse the ITC. So these 3 steps are associated with ineligible ITC, which you need to cater going further. So a suggestion that we can simply make the habit of entering a proper entry and not expensing it off together in eligible ITC specifically. Now, going further on GST 9, since again for 1819 due date is coming, and we all know that yeah, we need to comply with GST 9, and Table 6 and table 7, which talks about ITC appeal and reversal, that is still okay, and people anyhow comply, because with the simplification which has been provided by government, now no more bifurcation of ineligible or eligible, or my input service capital goods is not needed. So that is bit simplified, table 6 and 7. But table 8 again being an issue, because we all understand the pain which we have faced in 17, 18, because my table 8 does not match at all. And various press release and various release has been given by government that these are the few things which you need to handle, then your 8 will match. Obviously, again, even if we do those things, still it will not get matched. So few of the instances as such, if your purchase is different from your place of apply. So my GST is 29, and any of my purchase where place of apply is not 29, then I need to remove those invoices. All invoices which is reflecting in my GST 2A up to 1st November 2019, that only needs to be considered for table 8 of GST 9 for 1819. Then my other few of the instances when provided by government, that requires a lot of effort for table 8 of GST 9. And unless you don't do the reconciliation, you will not get to know that what is the right figure, whether government are that figure which has been provided by government, that is right, or which has been provided by us, that is right. So for this also, a proper appropriate reconciliation needs to be done. Now, going further on 9C, we all understand that there are two tables for ITC, that is my table 12 and table 14. Table 14 has been made optional, which was a biggest pain again for 17-18, which has been made optional for 18-19 at least. So no need to worry on table 14 part. But table 12, which talks that me being a larger enterprise having 20 GSN, let's suppose I have registration at 20 states, so I have 20 GSTN. Now, from that PAN level, from that books of account which I'm making at centralized level, let's suppose I'm making at centralized level, I need to bifurcate it on the basis of GSTN, and then that needs to be reconciled with my books of account, and then that needs to be reconciled with my GSTN. So that exercise is again needed when you do the table 12 of GSTN. In all these areas, reconciliation plays a major role, because if you have done the reconciliation at before let's say before filing GST 9 or 9C, then you can make the adjustment appropriately. And again, for this purpose itself, table 8 of GST 9, a simplification made by government side, and they said, let's suppose your table 8A to 8D is not getting matched. 8A is not what you are calculating as per your calculation. Then a PDF copy can be generated. You do your own calculation, generate a PDF copy, upload it along with GST 9C. So that facilitation has been given by government side, and which does not require any CA signature or anything. Self-attestation is sufficient for that. But this exercise also requires you to do the monthly reconciliation, and you to do the reconciliation before finishing GST 9. So going further on, so we understand that these are the importance of reconciliation, where ITC is needed, and what we have done as of now for ITC, and what improvement we need. So we, being at ClearTax and having experience from the inception of GST, so from 2017, we are the first to initiate our reconciliation tool, and we are improving. Honestly, we are improving that reconciliation tool on time-to-time basis based on client feedback. So many improvements has been provided by clients, and we evolve from that itself. Now we have 60 to 67 validation in-house before when you upload the data itself. That those things helps a lot when you do the reconciliation. So I'll not take a lot of time over here. I'll just quickly show you the glimpse that how reconciliation has been done, and then we obviously will share the PPT with you guys, and then you can see the process by yourself. So one more benefits which we are coming up with, everyone who is having 10 or let's say 15 GSN understand the pain of doing reconciliation on GSTN basis. So that for each GSN you simply need to download GSTR 2A, then you need to upload that purchase register of specific to that GSTN, then you'll do the reconciliation, communicate to your vendors on each GSTN wise. So that is an issue which normal industry face. And based on the industry feedback, we have come up with pan level reconciliation, where let's suppose you have 30 GSTNs overall, then what you can do, you can pull entire 2A of 30 GSTN at a shot, and you can upload entire purchase register at a shot and do the reconciliation together of entire 30 GSTN. So that will save a lot of human effort, lot of clerical errors will be saved over there. And obviously this will help you a lot doing vendor communication as well, because you can simply do it for entire 30 GSM. So that is the benefit of panel level reconciliation. Going further on the steps, what are the normal steps which a reconciliation tool of ClearTax will provide, and how you need to go ahead. Simply, if you have used ClearTax portal, you can simply go on report section of my ClearTax purchase versus GST two-way reconciliation. Now you can simply download two-way of entire GSTN at a shot. So on a single click, no need to convert JSON into Excel, this and that. You can simply download entire GSTN two-way from JSON at a single click, which will look like this. So you will simply need to select the period that for what period you want to download GST to it, and simply click on this download data from JSON. OTP will be needed, and based on that OTP, all the data will be downloaded in ClearTax portal. Now, since this part is done, you have downloaded GST to it. You now need to upload your purchase document. So import purchase document. A defined format is there with ClearTax standard template, which covers all the aspects from law angle and from easiness of enterprise as well. Or we have a mapper facility where you don't need to comply with ClearTax validation, ClearTax template. You can simply use your own template. We'll just do the mapping, and you can import the purchase document. Now you can simply go on GST2 ClearTax, upload purchase invoice and bill of supply. Once this ingestion has been started, this screen will come up. Now, when you do the ingestion, like I said you that we have approx 60 to 67 validation in place right now. So let's suppose out of this 45, 12 invoice got failed and 33 invoice got passed. So here you can see that, yeah, these are the errors. You can download all these errors in Excel file. And again, when you do the rectification, again import the Excel file. So you don't need to do it twice. Either you can do a rectification, a small rectification on UI itself, or you can download everything and re-ingest it on ClearTax. Going further, so same, the downloading and import. And when you go on this red tab, you can see that why this error is coming. So let's suppose CGST should not be charged on this transaction because supplier place apply and my GST are two different. And CGST has been charged in your purchase. So those sort of errors, my GST sort of errors, invoice date going beyond that period, all those errors will be there in my place, which will automatically come for you. Now, once you have done the rectification and imported that file again, you can see the status changing from 22 failed to 45. Entire things has been passed down. When you go further, you can simply see that, yeah, this is my purchase document. This is the two-way which we have downloaded. Now simply click on Run Advanced Reconciliation. Once this advanced reconciliation has been done, you go and proceed to view that what is the results coming out of my reconciliation. Now, one more facility which we have is, let's suppose for document year, that is my financial year 18-19, my supplier has uploaded that invoice in let's suppose April 19 or May 19, June 19, wherever. So you have an option to select two-way return period of whatever range you deem fit, and a proper fiscal year, so that two-way of entire of even if different fiscal year gets reconciled with the purchase. So this is the option which will be provided to you. Now, when you go on match and reconcile, you can see that supplier-wise reconciliation status will be there. So all my suppliers list will be here. You can simply click on view invoices and you can see that what are the invoices coming out on all suppliers. So entire reconciliation report will come out for you. Or here itself, you can see that, yeah, these are all my suppliers. My values are these. These are my supplier values. And what are the difference? So these things can be seen from this screen. Going further, when we'll do drill down in my reconciliation, you can see that, like I told you, four things you can see under my reconciliation tab: match, mismatch, missing in my data, and missing with supplier data. So match and mismatches, match is like everything is getting matched, so no need to worry at all. Mismatch part is I have accounted, let's say, invoice date or invoice number 123, and my supplier is uploaded as X123. So those things will be coming under mismatch bucket because everything is getting matched, only invoice number is different, or something of that sort. Or that will come under suggested match as well. And missing in my data is when some invoices are there in my two-way and not recorded in my purchase data, that will come under missing in my data. And similarly, missing in supply data, that will be like invoices are there in my purchase data, but that is not uploaded by my vendors. So what I'll do further, so like we already discussed, these are the four types of match status which you'll see. Now mismatch in data. When you click upon mismatch in data, simply you can use the filter and click on mismatch in data. You can see everything. What all fields are not getting matched entirely, that will come as in red thing. So and see, you can see taxable value coming under red, taxable value coming under red. So this is as per my purchase register. This is as per my 2A. You can simply do all those stuff in UI itself, or simply download that Excel report and check it from there. Now, once you have this, for example, mismatch value, there are some rounding of errors. So rounding of errors of 10 rupees, that is negligible for you. What you do, you can simply select tax difference from this column, and tax difference of 10, minus 10 to 10 has been selected. You're saying that this is normal for me. I can tolerate this much. So you'll select that tax difference, and all that is suppliers can be selected. Take bulk action and accept your values. So when you do the reconciliation, now this has been parked as, even if it is mismatched, you have accepted those invoices. So you are not going to communicate these invoices to your vendor because it's a normal difference and that is tolerable for you. Going further on this vendor communication part. So like I told you, reconciliation itself is incomplete until unless you do the reconciliation, until unless you do the communication with your vendor part. So now, whatever mismatch is coming, let's suppose this wallpaper gallery is coming as a mismatch thing. Now, you can simply click over here and email to that vendor, and that will show that entire report that these are the 5 transactions which I have made through wallpaper gallery, out of which 2 is getting matched, rest 3 is getting mismatched, or 1 is missing, whatever. And your vendor can simply see that why this mismatch is coming. You can tell him to amend, or you can tell him to upload, as the case may be. So this communication helps you a lot. And let's suppose even if it is 100 or 50 vendors, then it's okay to do a manual exercise as well. But if let's suppose you have 1,000 vendors or 1,500 vendors, 2,000 vendors, then doing this manual task of emailing is a hectic exercise for you. So for that, email to all facilities also been provided, where you can simply trigger email to all, and that will go to all your vendors at a shot. Wherever there is difference, everywhere it will go under email to all. Going further, so this for this emailing purpose, you can write up your own message, that what message you want to write. You can see mark CC as 5% over there and send email. So a report for that specific vendor will be attached along with that 5 CC and message which you want to display to him. So those things can be simply customized over here. And this is how a report will look like, which will reach up to your vendor. So and one thing which we have evolved during the period is, what we have done, we have come up with a suggested match thing, where let's suppose your invoice number is GST 2017-18-0231 and your supplier is simply uploaded as 231. Even when you do the normal Excel reconciliation or something, these invoices don't get matched. So obviously because invoice number itself is wrong, and this will never get matched. But with the time period, we have evolved this much that now, based on our fuzzy logics and all, we can simply park this invoices under suggested match if rest of the fields are matching. So let's suppose my tax value, tax figures are matching, and believe me, practically out of 100, at least 30 invoices or 40 invoices will fall under this category. On an average, 30 invoices at least will fall into this category where invoice number is not getting matched, and then you'll feel a lot of pain when you'll do the Excel reconciliation. So this thing will be there, that based on that fuzzy logic, you can simply do the reconciliation, and you don't need to worry about that why invoice number is not getting matched. So this is the feature, one of the most liked feature by our vendors, by our clients. So that's why we thought that we'll show it to you now. So that's it from our side. Run advanced recon, and this will close now. And so I'll just quickly take up a few of the queries, and then for rest of the queries, we'll reply you on individual basis. So no need to worry. Along with PPT and your queries, we'll reply to you. But I'll take few of the queries depending on the time which we have. So if I'm accounting budget 18 December 19 current month, can we avail GST credits in the same? Yeah. So you can avail that credit in the same period. If it is if you have made the payment to your vendors within 180 days, then a specific column is there, 6H, where you need to report it in GST 9, and you can claim credit accordingly. What is the provision of ITC? Provision of Availing ITC on capital asset purchase, is there any different? So no, you can simply, in case of capital assets, you can go ahead, like either you can claim entire ITC at a shot, and along with that depreciation. So entire ITC of, let's suppose, a value of 10 lakh has been there for my capital assets. Now you're claiming entire ITC of that. Or what you can do, you are not claiming ITC, you are claiming depreciation and an entire of the portion. So that is the only there provision for capital assets. There's nothing more. There is obviously a different provision for second hand goods and rest of the portions. And now is this compulsory to raise invoice in case my last year turnover is more than, yeah. So not now, but yeah, from 1st October 2020, you need to raise invoicing if your turnover is more than 100 crores. If your aggregate turnover is more than 100 crores. So even if, let's suppose, my one GSN having turnover of only 10 crore or something, but at a PAN level your GSN is crossing 100 crores, then aggregate turnover as defined in section 2.6, you will need to comply with the invoicing thing, and then only it is a legal invoice. Like I already said, 48.4, 48.5, 48.6 has been inserted in my CGS rules, and they said that your invoice will be a legal invoice only if you are complying with the invoicing, if you are liable for invoicing. That's it. Then further, I have sort of yes, you can claim. Okay, so thanks a lot for lots of queries. What we'll do, we'll reply for all the queries over mail to you guys, and you can simply see those things. And again, if you face any issues or something, you can simply reach out to us on this mail ID. We'll cater all your queries and everything, along with that PPT and everything. We'll share with you guys. Thanks for being so much participative, and also let us know that what all further topics which you want to discuss, that we'll discuss going further on our next webinars and all. So thanks a lot, guys. Thanks.